from a strategy standpoint, if you can be active in the business, owning a hotel versus being a GP in a multifamily, there's probably more tax advantages for owning the active business than there is the passive, multifamily business.
That is correct. Yeah.
That is true. That is true. That is true. Good morning, good morning, good morning, America and the world. This is Vinny Chopra, Vinney and Beau Show with Brother Beau right there from Las Vegas. I'm in Danville. We got a great guest today. Actually, a very prominent CPA who has been working with, I'm just looking over here, member of the American Institute of Certified Public Accountants, AAICP, uniquely qualified to serve high net worth individuals. Sheikh is also, I've known him, my very good friend. He's my CPA also, and so forth. And he has been working with high net worth individuals due to 20 years plus experience with Price Waterhouse and KPMG, which is a big 4 CPA firms in USA, Fortune 500 clients, also, and one of the biggest Indo-Pak sole practitioner CPA in the country. I'm really privileged to have Sheikh Ji, and he's really also very much into real estate side. So he knows the nick and knacks, and also works with a lot of high IT professionals and all. Sheikh Ji, thank you for joining.
You're
Thank
welcome.
you.
Thank
थोड़ा
you.
जिहा right side पे हो जाओगे थोड़ा जिहा हाँ
Yeah.
इतनी
Okay.
हाँ
Okay.
बढ़िया
Thank you.
so glad to have you, and we are really looking into where the market is. Yesterday you opened up really something very special, the
Mhm.
bonus depreciation, which we used to get, and it was getting to 80%, then 60%. There is
Yeah.
a big law that passed.
Yeah. So they have extended everything to 27 now,
Oh,
retroactive to 23.
oh
So
wow. So
23
last
was,
year
yes.
also.
Yes, that is correct. Yeah. So anybody who is going into these big transactions plus adding a lot of assets, and when they purchase anything or even start anything, they will be still getting the depreciation 100%.
Even for last year, that's
Yeah,
what really surprised me.
for 23, yes. Yeah.
Anji, 23, retroactive to 23, and it's
Yes,
going until 2027.
that is correct.
100% of capex,
Yes.
everything that you're building, and any accelerated depreciation.
As well as
You
whatever you do on cost segregation part.
So bonus depreciation also works with like items you buy for your business, not just real estate,
Sure.
right? So
Yes.
so
Yes.
if I own an HVAC company and I
Mhm.
buy a work truck, right, for
Yeah.
$100,000, that
Yeah.
I can use bonus depreciation or Section 179
Yeah.
on that
Yes.
as well,
Yeah.
right? So
You can use it. Yes. Yeah.
so the moral of the
beautiful.
story, and I always preach this, is everybody should own a business. Everybody should own real estate, because that's how
Yes.
you're going to get the best tax strategies and
That's true. Yeah.
effectively.
Sure.
No, that
Everybody,
is so true, Bo. Yeah, like you said, we were talking before the show about leasing a building to do some business, but you said, Vinny, we need a real estate part of it for SBA loan, right? You were
Mhm.
just explaining to me, or you have to collateralize your personal residence or something you mentioned. But if you own the real estate and the business, that's when you take the cost segregation and all these bonus depreciation, right, Sheikh Ji? Huh?
Yeah. Yeah. Exactly. All you can take. Yes. So
the,
basically, the depreciation, the way it works is you have 4 walls of the building and the land. So those
Mhm.
parts go over 40 years. The land is not depreciable,
Mhm.
and the 4 walls go over 40 years. But everything else in between, you can depreciate it right away.
so
Beautiful. And it's like 5-year schedule, 15-year schedule,
Yeah,
27.5 year, like in
uh,
residential, and
that's correct.
39 years for commercial. And
Commercial. Yes, that's correct. Yes.
I'm not a CPA, or I don't play one on TV, but really, Sheikh, this is what I think people need to understand. And correct me if I'm wrong. If you're a W-2 employee and you invest in some sort of real estate deal, and you're not considered a real estate professional,
Yeah.
that does not mean that you can offset your W-2 income.
That is
Because
correct. Yes.
so this is why the strategy really is important. Like most people say, oh, you can do cost segregation. Well, unless you're cost segregating in the right business real estate, like if it's an active business like
Yes.
short-term rental, so most people just think they can take that $100,000 loss on the or depreciation loss on the K1 and offset W-2. No, that's why I became an advocate, and correct me if I'm wrong, of business ownership. If I'm a high-paid W-2 and I own a business, then the equipment I buy and so forth, I can then offset earn W-2 income potentially.
Yes. Other thing you can do is maybe your wife, you can make her active partner in that venture, So like we have discussed with Vinny, hotel part. Hotel is an active part. Short-term rental. All these things. And normally what happens is you cannot have technically two jobs,
Yes.
but if your wife or we can justify some hours, 750 hours a year, we can basically offset your W-2 in active business, not in passive business.
Correct.
Right.
Correct.
But
Which is very true what you're saying. I'm sorry, like syndication, which I do and everything, and funds, Sheikh, it's LP and GP. It's
Yes,
set in stone, limited partner. In syndication, the limited partners cannot take the active losses, right?
that is
Yeah.
correct. Yes.
so
Hanji.
this is the biggest thing that I've realized over the last couple years as I've been really kind of learning and listening to CPAs and things. It's like, look, everybody needs to consult with a tax strategist CPA, because not all CPAs are corrected are the same, right? Some of them just they don't understand all these strategies, and like you're basically leaving a lot of money on the table, right? I remember years ago somebody told me, "Oh, I made about a little over 4 million, and I had 5.4 million in losses." Right? People complain. People complain about these high profile people paying no tax. Well,
Yes.
look, everybody has the same playing field with the tax code. It's meant for us to understand how to use it, right? Like, there's the only difference is they're taking advantage of what's there for you. So anybody who complains about it, it's really their fault for not getting with the right CPA and learning these tax strategies.
Yeah. Other thing is normally when we discuss with clients, we have clients who are kind of long-term into rental, let's say, and they have paid off a lot of their, loans and stuff. So they have a very, very positive cash flow, as well as positive income on their, rental or passive income. So what this does is, so we give them, let's say, passive losses, so they can offset each other. You know what I'm saying? And they don't pay tax on the income which they are making from their, old rentals they have for 10 year, 15 year, because, they are generating passive income. And with this, if you are, we are doing passive losses due to depreciation, so you can offset each other. You know what I'm saying?
That's
And don't
very
pay
true. So
tax.
what you're saying, Sheikh, if I may, like,
Sure.
so they can be having other investments passively owning, and it's making positive cash flow. And if
Yeah, as well as
syndication gives them
positive,
passive,
yes,
Hanji,
as well as
and positive
positive tax income too.
tax
So
income
cash
also,
flow and tax is different. So
Hanji, yeah, that's true.
yeah,
But they can take positive cash flow from one business or rental property and take the negative from another asset, which they
yes,
are also passive. They can be combined in that calendar year
that is
so
correct.
that their total passive income will be reduced. Let's
Yeah,
just say that, right?
exactly. That
So
is
that
correct.
they
Yes.
will reduce their taxes.
Yeah,
Excellent, excellent.
yeah,
And many
yeah.
times I tell my investors also in syndication, because these passive losses 1 year can be carried to the next year and to
That
the
is correct.
next year and to the next year and accumulate it because when we sell the property, there is a gain because we have to capture the depreciation, and
Yeah.
you can back that total gain with the accumulated passive losses. Hopefully, the net result is zero or maybe very little taxes. Am I
Yeah.
correct in that, Anji?
But
Ah,
it depends on the activity.
ah,
So
I
if
see.
you have one activity with big suspended losses over the year and you
Mhm.
dispose that off, then all your suspended losses become like additional basis in the property to calculate the gain
Yes,
or loss.
right, right, right.
Yeah, so
So
it
you
depends on the
have.
activity. You cannot
Mhm.
accumulate everything. Yeah, but yeah, if you dispose of that activity which has a lot of suspended losses, then your gain goes down. Yes.
Oh, totally. Because you have to capture all the depreciation losses, let's say,
Yeah.
at the sale, Anji?
No, depreciation losses at activity level. So when we give you K1, it's there. Okay. But
Anji,
when you do your individual tax, then you are basically looking, because at activity level, you don't know suspended losses because suspended losses are at individual level.
I
Okay.
see.
So at
Mhm,
individual level, then you can say, okay, I dispose of this activity. I have this much suspended losses, which I could not use. So let's
mhm,
say I have a $2 million capital gain and I have $1 million suspended losses. Your gain is
mhm.
only 1 million then. So it's not two,
Right,
you know?
you got it, Bo?
Yeah. Yeah. I mean, really, this is why you need to understand a little bit of this.
Yeah.
So when you're having conversations with your CPA, you
Mhm.
can, this is all part of it because a lot of people miss out on the tax part, which is like 40% of the equation. They're always worried about making more money. Well, what about keeping more money? I think is
Mhm.
more
Exactly.
important. Like, I want to get off the hamster wheel. Well, how do you keep the most
Yeah,
money? And what are the
yeah.
strategies around that? That's why I think these conversations. I used to think tax was boring. I actually like it more and more. I learn about it. I'm like, this is like it's all
Hmm.
Mhm,
strategy. It's like playing
mhm,
chess. It's playing chess, and
Yeah.
and
mhm.
and you can really. I could go out and buy more equipment this year if I needed to, because
Yeah.
Huh.
even if I didn't need the equipment, because I want to offset, and then next year I need the equipment. So you can really go in every year with a good strategy to really
Uh,
minimize your tax consequences.
Yeah.
you know,
It's pretty good to kind of review your with your CPA on quarterly basis, what you're
Anji.
doing, how, your P&L looking at that time,
Mhm.
and what you want to achieve and what you have to do before the year end.
When do you know? So for business owners, Section 179 versus bonus depreciation. What's the real difference, and why would you use bonus
Mm,
dep- bonus depreciation versus Section 179? I'm a little unclear on that.
mm.
Section 179 is basically if you are kind of looking at asset by asset, you know, okay, I'm going to add this because Section 179 is different for each person technically because you
Mm.
have federal level, you have state level. So like California only allows you 25,000. So it doesn't give
Okay.
you anything else. But
Mhm,
bonus is like a blanket endorsement. It gives you, okay, you don't have to worry about small item here and there. But once
mhm.
179 is mostly if you're adding one or two items, then you can look at it that way. But bonus depreciation is especially when you are in a big venture and you are spending a lot of money. So yeah, so that gives you pretty what you call it big deduction. But yeah, 179 is basically it used to be, before bonus depreciation came in. That was pretty big. But after
Mhm.
bonus depreciation, 179 is kind of at the back end now.
I
Got
see.
it.
I see.
Yeah.
Now, the bonus depreciation, the term was invented by Trump, is that right? President
Uh,
Trump back
it,
then, or no? No.
no, it was before Republican, I think, Bush era.
Okay, okay.
Because I think since 9/11 and all that happened, then a lot of
Mhm.
activity kind of got stopped. So
Uh-huh.
they start giving that one. and
Acha.
but it's the most recent. Yeah, Trump gave a lot of it because he is
Mhm.
into hotel business, so he knows these
Acha.
things, and
Yeah, yeah.
that's what he was pushing it to. Yeah, but I
Totally.
think with our 2008 recession, this thing became pretty big
I
uh,
see. I
because
see.
yeah, a lot of people were, they were having losses and nobody was trying to make any money. Sorry, investment. Uh,
Mm-hmm, mm-hmm.
so that's what they start pushing it. So it's basically starting from 2008 on, in some
2008, and
shape
it's
or
an
form. Yeah.
incentive, Anji. It's an
Yeah.
incentive for investors to put more money into the property because everything you invest, I think dollar per dollar, you're able
Hmm.
to put it into bonus depreciation because you're
Yes.
writing off capex, every dollar, any upgrades and everything, plus also the 5-year schedule, right?
Yeah.
You could take it right away, and 15-year schedule, if I
Yeah.
remember.
5 to 15. That's the criteria.
That's the criteria.
Yeah.
Plus, everything invested in that particular year can be taken total deduction dollar for dollar in, as you're doing the taxes, filing
Yeah.
the
As long as
taxes.
it's below 15 year.
Oh,
Uh,
below 15 years, not
yeah.
after that. Yeah,
No,
those
not
things
more than
will
that.
stay 27.5 for 39 years for commercial buildings and residential 27.5.
But
So
normally,
this
what
is
I'm
it.
saying is those are
Anji.
basically the four walls of the building.
Yeah,
Those
yes,
are the
yes.
27.5 or 39 for 40-year basis. But
Sure, sure.
everything in between, let's say on a hotel, um, you have TV in the guest room, you have
Mm-hmm.
furniture, you have
Mm-hmm.
all the fixture there. Sometimes
Yep.
you have standalone air condition in there.
Yeah.
So
Yep.
you can get all those depreciated the same first year.
Totally. Totally. All electrical, right? All plumbing,
Yes,
everything in the walls. What you're
that
saying?
is correct.
Commercial
Yeah.
kitchens, dining, bar, everything.
Yeah,
Yeah.
which has a
Okay.
life of 15 year or less, technically.
15-year or less.
Okay,
Beautiful.
I got a question.
Sure.
Um, I find a boutique motel that I want to buy, but I don't
Mm-hmm.
have the money necessarily. And
Mm-hmm.
some of my friends that are high-paid W-2 employees,
Mm-hmm.
we buy it together, just as partners within, like, an LLC takes ownership, and then each of us are managing members or our
Mm-hmm.
entities. What do they need to do is there, do they need to materially participate in order to be an active business, in order for them to take the advantage of cost segregation off of to offset other income? Is that what we would deem what we would
Well,
need to do?
first of all, one thing is the business. What is the nature of the business? Okay, so apartments are basically passive income.
This is a
Hotel,
Right.
hotel.
yeah. So hotels are active income technically,
Active
and
income.
then as long as they are putting 750 hours or more a year into
Right.
the parts, like, so they review the financial, they approve some contracts, so they are involved in some capacity, so that
Mm-hmm.
is, plus they are GP, so they are active technically,
I see.
and that's what all the losses or any depreciation can be offset against their W2 income.
So,
Mm-hmm.
but why do they have to they have to, so one of the tests is 750 hours?
Yeah, that's correct. Yes.
But like, what if, I mean, that doesn't, I don't know. I don't know if I really, like, that's not really a good rule, I don't think, because you can be
So,
active and manage. You can spend 2 hours a month being an active manager, right? Like, and be very efficient and delegate.
Mm-hmm.
So that's
but
kind
that
of
is for a
interesting,
year, 1 year. It's not monthly,
Oh, yeah,
right?
it's for the whole year,
for the whole year.
750 hours. But like you
That's
said, if
14
the
hours per month, right? 14
Yeah,
hours per month.
something like that.
Oh, that's not bad. I mean,
Yeah.
that's
you can embellish a little bit.
Yeah.
No, I'm just kidding, but
Okay.
no, 750 divided by 12. Hold on.
Yeah.
That's
oh,
not 14, that's more, brother.
I was doing the wrong
No,
math.
it would have
Yeah,
to.
750 divided by 12.
Hmm.
yeah. So that's a lot of hours. But I was
62.
thinking, like Sheikh said, maybe the spouse can be like spending that time where she does not have another job, but she's able to, be actively involved, I think. Maybe, looking at reports and making decisions, like you said, Sheikh, and also contractors, getting
Yeah.
actively involved can deduct then because they're filing jointly, and
Yes.
she could be the one who's doing 750 hours or more. And then
Hmm.
the passive, active losses of the hotel can be batted against the W-2 income.
Okay, so this was considered material participation, right?
Yes.
Material participation tests.
Mhm.
So, anyways, what are the tests? But so material participation. Okay, I'm looking for the test that you do because that's what you want to do. Test
Yeah.
one: you participated for more than 500 hours. This is what it says on this thing. Test
Yes.
two: your activity substantially constituted all participation. Test three: you participated for more than 100 hours and no less than any other individual. Test
Yes.
four: the activity is significant participation activity and you participated in all of them. Test five, test six. Anyways, they have 7 tests that I'm looking here.
Yeah.
But anyway, so the point of the matter is you really need to document this and get with a good
Mhm.
CPA to make sure you actually are materially participating. Because I think a lot of us throw out these ideas, and when we're not CPAs, listen, guys,
Mhm.
this is just education purposes. You're gonna need
Yeah,
to meet with a CPA
each,
because this is education
exactly.
only. Because we're not attorneys, we're not a
Everybody is
CPAs.
different.
Sheikh
Yes, we are
is, but you
not.
have to book a call with them. But anyways,
Exactly.
Yes,
Yeah.
yes.
so I think people need to be really careful because
Mhm.
there's a lot of people on social media and you hear them and they're like, oh well, materially participate.
Yeah,
But I'm
yeah.
going to really break down what that means and make sure whenever I'm offsetting something, I'm doing it the right way and making sure I'm documenting it in my little
And,
journal that would be
and I want to
considered.
record. Yeah,
Yeah.
I want to record also. I've been doing syndications, and I've never promoted that passive investors can be actively involved in the business. They are not, because they just give the money, Sheikh, right, to
Yeah. Yeah.
us, and they're
Hmm.
in the syndication. They are limited partners. We are general partners. We do 70-30 split or 80-20 split. So all the losses they get are passive losses. I just wanted to mention, I know some people in the social media say, oh, you can really deduct this and that. That please check with your CPA, Right, right,
Yeah.
right.
But that is why I think owning a small business is the best tax strategy for somebody that has a
That's what I
W
would
two.
think.
Because
Yeah.
if you own a business, you own a business. There's
Yeah.
Yeah.
you don't have to like materially participate. You own that business. That equipment you buy is equipment you buy. So
Yeah.
Mhm.
that's why I became the business ownership coach because everybody should own a small business. And if you've got money, you should definitely, you know, learn tax strategy. But if you're like the average person that makes 100 grand a year living in the Bay Area and you're just getting by, you should own a
Mhm.
business because you can pay less in taxes. You can grow your side hustle business to make more money. Then you can become wealthy and then you can go see Shiki, right?
Yes.
And then work
Shaky.
on your tax strategy. But we got to start with for the people that are aspiring entrepreneurs, they make
Yeah.
100, 200 grand a year. They're just getting by in the Bay Area, right? You make 100 grand a year, you're scraping by in the Bay Area. You need to own a
Mhm.
business to create wealth, to start making more earned income, also to help offset some of that W-2 if you do the right strategies. So that's
I'm
why
really glad you're
yeah.
asking that, Bo. I'd love Sheikh Ji to kind of expand. I know, Sheikh Ji, you work with lots of entrepreneurs, right?
Yeah. Yeah.
थोड़ा राइट साइड पे थोड़ा आ सकते हो थोड़ा ये हाँ
Okay.
इतने ये वो
Okay.
ठीक है ये वो
Okay.
ठीक है हाँ
Okay.
हाँ हाँ जी
So
हाँ
yeah.
जी
So basically, idea is to grow your wealth.
Mhm.
So a lot of time, yes, we take this depreciation and all that, but when let's say 5 years, 10 years down the road, you have built a lot of equity into it,
Mhm.
in the business and in the real estate, then you can go instead of one, let's say building, you can
Mhm.
do 1031 and buy 2 or 3 10 years down the
Yes.
road. So you can
Mhm.
roll over 1031 exchange and don't pay
Hmm.
anything. You know what I'm saying?
Sure.
So yeah, so
Yes.
that is, yeah. So it's not that okay. I could took the depreciation. When I sell
Yeah.
it, oh my God, I have to pay taxes. No, then
Hmm.
1031 comes in the picture, and
No,
that's
thank
where
you so much. That's a great strategy, Sheikh. I'm glad you brought it up. I know the hotel that Anshu and my partners and we all bought, we were able to 1031. So we
yes,
kicked the can, I call it. I've
yeah,
seen that. So it's the gains that is able to kick down the road and then down the road, then down the road. Could you give
yeah.
us some idea? Can it be down the road all the way till you die? Some people I've read and some people have said, okay, it just wipes out because if you die and you give it to the heirs, then uh, the what is that? It jumps up to the current
Step up
value.
basis,
Step
step
up,
up.
step up. Yeah,
Yeah.
step up. Can you explain that a little bit, please?
So
Yeah, that's it.
step up is let's say you have a property which your parents bought,
Hmm.
and after depreciation and everything else, it's let's say $1 million basis at this point. So, but when you die, then let's say it's $5 million at that time.
Hmm. Hmm.
Okay, so your kids will inherit at 5 million.
Correct.
They
Correct.
can go next day sell it, no tax,
No
because
taxes at all.
exactly,
Wow.
because the $5 million is the value at at the time of death.
Yes.
So their
Yes.
basis is not what your basis was originally.
Yeah.
Their basis is at the time of death, new appraised value, and that's where
Beautiful.
you can basically it's you can strategize that way too. So
Anji.
1031 helps a lot.
It
Oh
does.
yeah.
It does. And lots of people, I was just trying to get some numbers. I mean, is it in trillions? Maybe, I don't know, in real estate, which is in 1031 category,
Yeah,
because lots and lots of rich people, they always keep on buying more and more and more and more. And,
yeah.
that way they can defer
You see,
taxes.
you
Yes.
see a lot of time when you are in real estate or other adventures, you don't need money for day-to-day survival.
So true. So
So
true.
you can build the wealth part.
Hmm.
And that's where all these strategies come in. You can always, refinance it if you need any money out of it. But,
Yes. Yes.
your basic purpose to grow your wealth without paying any taxes.
I
You
love it. What you just said is
know?
so right. Why do we sell the asset is to bring more cash so that
Yes,
we could buy more. But by 1031, you're able to buy another building and
yeah,
then grow value and take the money out, like
yes,
line of credit, line of business, and collateralizing and everything. That
yeah,
does not affect the gains. And
that is
yeah,
correct.
yeah,
Yeah, yeah,
So
beautiful.
so Shiki, you obviously work with a lot of high net worth people,
mm,
businesses. Um, don't name names, but
yeah.
give us an example of one of your clients you've worked with for a long time and how they made their fortune, and like something that impressed you on how they built it. A little bit about
Mm.
their business. Don't go into details, but
Um,
because you see a lot of inside
yeah,
things on how people grow their wealth, and I'm curious
Mhm.
to.
yeah. No, I mean, I have some clients, who were entrepreneur in high tech industry, and they have, like, say, they their public, sorry, company went public, so they made good money.
Yeah.
You know what I'm saying? And then they bought something, you know, and at the same time, um, let's say they have $10 million capital gain sitting from selling, going one of their company public and selling some of their stock. But then they went into these ventures in the year, they became rich technically, when they sell their company. So let's
Mhm.
say they sold their company in February, March timeframe, and they made $10 million from there.
Mhm.
And then they have till the year end to invest part of it,
Yes.
you know. And so, that became what you call it active loss with the depreciation. So let's say it was 3 million. Let's say they bought a hotel for $12 million. So your first year depreciation, give and take, is almost 3 million. So out of your $10 million capital gain, because there are different character of income. One is called portfolio income, which is capital gain income. Then you have passive income, which is from your rentals. And then you have active income. So active income actually helps you with the capital gain too, or active loss for that matter.
FD loss.
So,
Yeah,
so if I have if I sell a company, I can still use some strategies by taking that and buying a big piece of real estate that same year and depreciating that. Can it help
with
off?
active participation, yes.
Yes.
Special.
See, that's pretty.
Beautiful.
So
Significant.
if you're a high tech person, that would make sense to get into, like, what other businesses, like hotels, because that's active, right?
Yeah,
There are some other businesses too, like oil and gas. I know I don't promote that. I've never
yeah.
invested in it, but I've known my friends who have invested and gotten Sheikh 100% write off. There are
that is correct.
certain like ATM, I heard, business or vending businesses because it's all structure or machines, I'm
Yes,
told. And Bitcoin mining was another one. People said that you could deduct about 95% because it's all computers or machines. So could you throw some light on that one? Yeah.
no, basically, yeah. So anything which you, as we said, 500 hours, and
Hmm.
you are participating it, as
Hmm.
long as you
Hmm.
don't have anything else going on too technically. But
Hmm.
so if you can justify that, and it's not a rental business, everything else can be active technically.
Hmm.
So yeah, so whatever you do over there, the loss you generate can be offset against capital gain too.
Hmm. Right,
So what I'm
right.
saying is active income is pretty desirable for tax
Yes.
situation.
Right, right. Yeah,
It's
So
yeah.
so
So sorry. Go ahead.
yeah. So
yeah.
strategy. From a strategy standpoint, if you can be active in the business, owning a hotel versus being a GP in a multifamily, there's
Hmm.
probably more tax advantages for owning the active business than
Yes,
there
yes.
is the passive, multifamily business.
That is correct. Yeah.
Yeah.
That is true. That is true. That is true. And I think, again, we don't want to undermine because so much is going on in syndication and fund business where there are lots of entrepreneurs and investors who don't have the capabilities of finding the right deals and making them happen or get on the loans and then manage those assets. But by investing passively, they are able to accumulate the passive losses, right?
Yeah.
And
Yeah.
then back it against the passive gain, which happens in 3 to 5 years in syndication, for example. So that way, they don't end up paying too much taxes. Again, it's everybody's situation is different. I'm not CPA or attorney, but
Yeah.
that's what we find in the syndication world that you're able to make the cash flows and then you're able to also take care of the advantages of the cost segregation, bonus depreciation to some extent.
That is correct. As I mentioned earlier, it all depends on the character of income.
Anji,
So
yeah.
you have to isolate, okay, this is my passive losses, and this is
Yes,
my passive income. How do I
yes, yes.
strategize to offset each other and don't pay tax? Build the wealth on
That's
that part. Same thing on
X,
capital gain and capital losses. You can
Anji,
offset
yeah.
each other,
Hmm.
at the same time, people, a lot of time we tell them, okay, evaluate your portfolio at the end of the year,
Hmm.
see what, if you have a huge capital gain already, let's say $1 million or 500,000, then you
Hmm.
are sitting on a portfolio where you have some losing stocks.
Yes, get rid of them.
So
Yeah,
other
yeah.
than wash sale rule, which is
Ah,
30-day, you
Anji.
can strategize. Okay, I can sell these things, generate the loss, capital
Yeah.
loss.
Mhm.
And then if you are so like that stock, after 30 days or 40 days, whatever, you can buy it back.
Buy it back, Anji. Yeah, yeah.
So you generated the loss technically, and that
Excellent.
capital loss can be offset against your capital gain.
I appreciate that. I know a lot of people probably watching us are into diversified assets, and stock market is one of them.
Yeah,
And, like I mentioned yesterday, it's so important. It just hit me right away. I need to look at my P&L like
yeah,
every quarter, and then
yes,
meet with you, Sheikh Ji,
yeah,
and I think
yeah,
we'll suggest to lots of entrepreneurs that they should really look at and meet with your CPA and your tax strategist,
yeah.
because they could help you save on taxes. They can't help you December 31st
That is correct. Other
when the
thing
whole
I
year
have,
is
yeah, yeah. Other
gone.
thing I have seen is, um, you know, people by nature are either aggressive or non-aggressive. You know what I'm
Anji.
saying?
Mhm.
But what I'm educating is basically being active participant in your
Yeah,
own building the wealth
sure,
part.
sure,
You know what I'm
sure.
saying? Because sometimes people say, "Oh, this is too aggressive. I don't think it's going to work for me. It's not my nature and all that." But
Mhm.
if you have a second voice telling you, okay, it makes sense tax wise,
Mhm. Yeah, yeah.
so then I can convince you, okay, let's do it.
I
But
love it.
yeah, you know what I'm saying? It's just sometimes I run into these things.
Mhm.
People, oh my God, I wish I would have talked to you in December, but now it's
Yeah,
all January. We cannot do anything. But
for sure.
a lot of time, I can, as I said, I can strategize, putting
Yes.
okay, this is your passive loss, this is your passive income, how much you have passive losses, how much your passive income, you're going to offset each
Yes.
other. You know what I'm saying? This is your capital gain, this is your capital loss. We can offset against each other. But then there is an active income or active loss, which
Mhm.
kind of helps you especially in the capital gain area, as well as against any other active income. So those two are the areas where you can play with a lot.
This is very important, very, very
Yeah,
important, Sheikh Ji.
yeah,
We
yeah,
really thank you for coming
yeah,
on the show. This is amazing. I think everybody watching us, listening us, it's so important that we look at, I mean, not monthly, monthly is hard, but
yeah,
quarterly at least to strategize what
yeah,
you're planning to do. I remember
yeah,
hearing from others also, it's good to plan strategies, and
yeah.
that will save thousands and thousands of dollars,
Exactly.
that particular year. You can't take care of 24. What
Yeah,
happened in 23? Which
exactly,
is we are in, March now, right? April
exactly. Yeah,
15th is coming, and
that is correct.
you know,
Yeah, other part is especially older clients. So there are two things. One is called your cash flow. Okay. And then there is a what you call it tax loss. So in cash flow, you don't factor in depreciation or amortization. You know what I'm
right.
saying? That increases your loss for the tax purpose.
Correct. Correct.
You know what I'm saying? So yeah, so a lot of time, let's say you have depreciated something, and you have paid it off, so you don't have too much interest payment on that property, and then you don't have too much depreciation on it because your base is low.
Yes.
So then I
Yes.
say, okay, go buy a bigger property with, let's say, a good loan technically. So it gives you
Hmm.
depreciation as well as because the value is pretty high, and then at
Hmm.
the same time your interest payment is high
Yes.
too. So then you can wait. Let's say, okay, interest rate is going to go down at some point. You can refinance it. But what I'm
Hmm.
saying is, for your tax purpose, your cash flow will be okay. But for
Hmm.
tax purpose, you can offset each other and don't pay tax. One
Yes.
positive
Yes.
income, one negative income. Yeah.
Use good leverage. Use debt.
Yes.
Use
Yeah.
debt to
Yes.
create
Use debt.
wealth.
Good
Yes.
debt. Good debt. Yeah. Not
Good.
buying cars and this luxury
Yeah.
things, homes, personal residence, but really good assets which cash flow and which have good mortgages on them. It's good debt. Good debt. No,
Yeah.
thank you so much. How can people reach you, Sheikh Ji? I know you
Uh,
are in
yeah.
Sacramento. Yeah.
Yeah.
Uh-huh.
So my I have my cell phone and my office number. Office number is 916-929-0152.
Uh-huh.
And my cell is 510-459-6392. You guys are more than welcome to text me.
Very
And
good.
yeah, and I can be reached both ways.
Yes.
And then if you want to email me anything, then idreescpa@gmail.com. That's my email address. Or
We'll
Sheikh
put
at,
them in the comments, Sheikh Ji.
yes,
Yeah, no,
okay,
we
sure.
will. We
Yeah,
appreciate that very much for you taking
yeah,
the time and
yeah,
joining us. And I want to
yeah,
thank you publicly for really helping me in our several LLCs, CP, taxes and K1s. And you're so
sure.
prompt and your whole department and you provide. I know the website I saw, you have a
Mhm.
beautiful website. We'll put that also.
Okay,
And
thank you.
Bo, any message, brother? Yeah, any question? Yeah,
Well, I just think this proves the point. You got to play. You got to get in the game. You got to learn the rules, and you got to
yeah.
get with the right strategist. And I always tell my brother, I go, man, you make like 800-900 grand a year W-2. You have no write-offs. You're getting the worst of the worst, and you're in the financial service business. I'm like, what are you doing? Like, I know he does, he's wealthy now, but it's like, man, you
Yeah.
make so much money W-2. Your
Uh-huh.
wife needs to do something. Get in the game. All my friends on the other side that understand these rules
Yeah.
they're the ones that are getting ahead, right? They're the ones that are 2-3xing versus the guy that's not. He's paying 200-300 grand a year in tax, right? Like, and he has no
Mhm.
write-offs. Like, and he's in financial services, wake up and do something about that, because other people are, and I see it every day, and that's what kind of motivates me. It's like, I know this, you should know this. He's an economics degree, like, he's smart,
Yeah. Yeah.
he works with financial planners. Those people don't seem to get it as much as the other people on the real estate side. They
Yeah.
get it. Like, I think that's why real estate people and business owners, like hotels, they're the ones that are going to be reaping the rewards going forward. It's kind of my
So
takeaway.
true. I mean, I've read and listened and heard from so many people, specialists, real estate, the taxation laws in USA are built for people who own real estate. I mean, that is the truth. And businesses,
Right, right.
entrepreneurs. That's why so many people like to do side hustles or businesses, and they are able to then leave well, I don't propose that. W2 job brings the stability and everything, but having that, your own ownership of the business is a fantastic way. And if you're paying too many taxes, please wake up, and learn about literacy, learn about taxes, and please do reach out to your CPA or Sheikh Ji, who is
Yeah.
very, very accomplished CPA who has been with, and Walt Disney too. Sheikh Ji, you told me one
Yes.
time you
Yeah.
were doing taxes for Walt Disney. I remember that
Yeah.
now.
I have worked with them too. Yes. So I was a
Yeah.
part of PwC team. Yes.
PwC, and you have
Yeah.
all the strategies, and you
Yeah.
have so strong business in the Bay Area. I
That
really
is correct.
appreciate your coming
You're welcome.
on the show, and thank you
Thank
so
you.
much, Ji, huh?
You're
Thank
welcome.
you.
Thank you.
Thank you.
Okay, Bo.
Sure.
Thank you very much.
Thank you. Thank
Thank
you. Bo and I are together to really bring the best to get your business to the next level.
So do me a favor, subscribe and share. I really appreciate it. And I look forward to connecting with you in the future.